All right, welcome back. This is going to be class number 4 for the model. Some people were asking me a lot of questions on stream, so I thought I would just touch on the stuff that I've been asked a lot about. And that is going to be basically extra details about the 5-minute model in terms of entries and just small little details that make a difference in my decision making, as well as the pivot points. Why do I flip from long to short? Why do I flip from short to long? When does that happen? And so on. I've talked about the 2-bullet system. I mentioned that 2 bullets and you're either done or you're just going to have to try over and over and over until you're right, which is going to be a recipe for disaster. So we'll go over that because today I did that on live stream, but I didn't do it on my actual accounts. I did it on a eval because I needed to get it done either by, I think, today or tomorrow, or it would blow up. So anyways, let's go straight into it. So the extra pointers, I'm going to go as I'm talking about it. I'm first going to talk about the pivot points, meaning when do I flip my bias from long to short or from short to long? And that is going to be with standard deviations. Okay. So when standard deviations are met from either side, whether it was long or short, you always want to be looking to see if there is a possible retracement that you could have on the current trade idea that would bring you to a key liquidity pool that we left, meaning a sweepable that was left open. So then you can pivot into the new idea. So showing you guys an example of that would be, for example, here. Okay. Well, actually, it starts here and then we'll go for the rest. So today I did a day review where I talked about my long on stream. I took this long on stream to about right here, give or take. So it's like 6, 7-ish R, somewhere around there. And this long was a bullet number 2. So it was bullet number 1 of the 15-minute here. That bullet got wasted. The bullet number 2 came, we swept. And then after we swept, I was looking for the first breaker to the upside on the 1 minute, which is right here. So that's bullet number 2. But to me, it wasn't bullet number 2. I had not taken any long. I actually avoided this long and I avoided it on purpose. So that brings me to the first extra detail that I should probably start going over. One of the things that I look at is the size of the breakers. So from this bottom to this top, this is 75 points, give or take. Depending on volume and how much movement NQ has, that's quite large. So it doesn't mean that it will never deliver. It just means that the probabilities of it delivering usually are diminished. They're going to be lower than your usual numbers that you might see otherwise. So if this is the first bullet that I'm about to take and it's quite thick, I'll usually avoid it. If I miss the trade, I miss the trade and it is what it is. But usually this will get swept one more time. It becomes a bullet 2. And I almost never fade bullet 2s as long as I know the draw is still to the upside in this case, or the draw was on the downside if I was shorting. So for this, I did not fade. And of course, I got heavily rewarded by the fact that I just went ahead and took the long. Now, the pivot point is the price has been bearish, right? So how is it that I'm catching a continuation trade if we just been dropping and dropping and dropping, right? How does that make sense? How is this a continuation and not a reversal trade? Because that's actually the bottom of the day. So this is Asia. This is the 1800 open here. I bottomed the day, right? So how is this a continuation and not a reversal entry? The reason why is because, again, the higher time frame. Yes, on the 1 minute, this is a reversal entry, no doubt. We just keep dropping, right? But as far as the 15-minute goes and the 5-minute goes, it's actually a continuation entry. Where are we coming from and where are we going to? This is an entry I spoke about on a day review on a Monday, I believe. And this 5-minute breaker and then this 15-minute breaker, this 15-minute breaker more specifically, is valid per my model on the 1 hour. There's a 1 hour sweep right here. We swept and created a 15-minute breaker. That means that this is very likely to deliver to 4 standard deviations, which I'm still watching for. So if this is very likely to deliver to 4 standard deviations, then this is going to be the draw, right? And if that's the draw, anything that sells into an area where I can buy from that continues that trend, it's an opportunity for me to buy as long as it doesn't require more than 2 bullets. Now, is there 5-minute sweepables here? Yes, there is. CISD, high, low, high, that's a sweepable, right? CISD, high, low, high, that's a sweepable, and a CISD to the downside, but it's a sweepable. This is another sweepable here, and so on, until, technically speaking, this high gets ran again. So, oh, sorry, that's not actually, well, no, it is. It is. So it doesn't make sense for me to keep on buying in this area when it already lost 2 bullets on the 5-minute. So instead, what I need to do is give up on the fact that this is going to go long anymore. So let's zoom in on it real quick. Let's zoom in so you guys can see what I'm talking about. Okay, so for the long side, again, you're still long bias. At this point, you're still long bias because longs haven't failed you yet. Okay, you're still long bias. You have bullet number 1 here for the long, okay, which fails you. You then have bullet number 2 here for the long, which fails you. Then price goes up higher, 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 and it goes all the way up here. Now, when it goes up here, you took a loss in the buy and a loss in the buy. Price then takes off and starts going up higher. But let's mark out the left. Price does not take the high of the down breaker on the 5-minute. So if it doesn't take the high on the 5-minute and you flipped your bias from long to now short, at least temporarily, then you can take a sell out of this area knowing that we're supposed to not be dropping. Now, this obviously wouldn't have filled you. Unfortunately, you would have missed this if you took it that way. I think there is another reentry on that though. Yeah, there is the reentry. Okay. So why would you have pivot? If you're trading live on this moment in Asia or London, why would you pivot? If you took this 2 L's, you would pivot because the buying side is clearly not going to go up higher right now, at the very least for the 5-minute time frame. So either we're going to make it way down to a higher time frame sweepable, aka the 15 or the hourly, and then we can turn around from there, or we will drop. I mean, we will go up, but it's going to require more and more bullets. Like here, if you would have taken this 3rd bullet, it would have delivered to 2.5. But if you're not aiming for 2.5, this counts as a loss. If you were aiming for 4, this would have counted as a loss because you would have never exit your trade. Okay. So yeah, that's basically the pivot point. The pivot point is just when one side loses 2 bullets, you consider the other side and you take into context. What would have made me short this? Well, this was bullet 1 for the short right here, right? It did close under. So technically this huge thing is a breaker to the downside right here. And I mean huge because it's in Asia and London, so the volume is really low. But this big CISD is in play for the short. It gets taken out again, and then this is bullet 2 now for the short. So any shorts out of here are high probability to deliver to 4 standard deviations. Unfortunately, the 1-minute breaker, it's so tiny that yes, it delivers to 4 standard deviations immediately. So you would have to deal with the 5-minute breaker, which is from this bottom to this top. Okay. Now it did create a CB as well, which gives us another indication that price is going to go down lower. And then from the CB, we have a 1-minute breaker, which let me see how it forms right there. Okay. We have another 1-minute breaker that is valid per the model. And this 1-minute breaker, what do you know? It's a continuation from the bullet 2. And because bullet 2 on the 5-minute, it's going to deliver. This automatically delivers. It goes to 4 standard deviations, and you would a TP. So the pivot point is one side is losing, the other side must be winning. When that side stops winning, the other side is winning. And so you just pivot back and forth, but only on that second bullet, okay? If you don't do another second bullet, you're going to pivot too early, and you're going to give up on the right idea too soon, okay? So price is coming back down. I'm looking at the 15-minute sweepable as the sweet spot. Well, unfortunately, there's no good setup here because this breaker is too thick. So like I said, too thick of a breaker, not a good sign. Too thick of a breaker here for Asia, not a good sign. This is not going to hold. Too thick of a breaker here for New York on the first bullet, this is not going to hold. This breaker on the 5-minute is thick, right? It's relatively speaking thick. This is the 5-minute. So it's not as thick, I guess, in the 5-minute, but on the 1-minute, it looks really thick, right? But it's a bullet 2. So bullet 2s are more likely to hold long term than bullet 1s. So I'm more willing to be lenient with that bullet 2 rather than with the bullet 1. With the bullet 1, I'm looking for the ideal setup. With the bullet 2, I'm willing to be a little bit more lenient and I'm willing to lower my expectations because it is more likely to play out by default as long as the draw on liquidity that I have is correct. So that's basically the story here. Once this got swept again, this was bullet 2. Well, what happened to the morning projections? Morning projections mean 4, 4.5. So what's a great area for me to start looking for the opposite to happen on the chart? At 4, 4.5. So now let's zoom back out and let's put everything into perspective of why I say this is a continuation trade. Well, what was the original idea on this chart? It's that we're going to go up. If you see the 15-minute chart, this is the hourly sweepable here. I just don't have it marked out, but there's an hourly sweepable here. Low, high, low, higher, high, breaker. So now this breaker is in play to deliver to 4, 4.5. So today we have the high, low, and then we just went higher. All the price action here was on the 5-minute only. The 15-minute never came to get swept. You see? So when the 5-minute needs to retrace, because it will, again, the chart is not just going to go straight up and then straight down. It's going to make liquidity, which this is what it is here, right? It starts moving sideways. It does all it needs to do. There's plays in here on the lower time frames. Finally, the 5-minute play that comes out of the 5-minute CISD. It was a 5-minute CISD, 5-minute sweepable, bullet 2, drops, gives us the sweep on the 15-minute right here. It gives it to us one more time right here, right? And now we're back almost to where we started originally, which is this breaker. It didn't quite get there, and it doesn't have to, but it relatively came back close to it, and it came for the very first sweepable from the breaker. That's the very first sweepable for the breaker on the 15-minute time frame. And this is a 15-minute projection. So that's where it's going to continue from. Simple as that. So the detail is this is a continuation, although it may look like a reversal on the lower time frames. My model focuses on continuations from a higher time frame idea. You're just getting a lower time frame entry to capitalize on the risk to reward ratio. That's all it is. But you're not taking a 1-minute breaker to take an actual 1-minute breaker. You're taking a 1-minute breaker as a continuation of the 5-minute, the 15-minute, the hourly, whatever time frame, right? And that's the real reason why it works out. If it's not for that, it doesn't. So an example of that and the logic of that is here. Okay. On the 5-minute, which is higher than the 1-minute, right? So it's, again, higher time frame. It didn't align with what the 15-minute needed to do. The 5-minute expanded. The 5-minute won on this buy side already. Here, there is a projection here. Let's go and zoom into that real quick, actually. So 5-minute sweepable, no breaker, no trade. So nothing to do that. We then sweep that and create an entry. Oh, there's actually an entry here. My bad. Okay. The bullet 1, bullet 2, and of course it delivers. So this side already won, and it's not gonna go in a straight line. This side has been winning. It won here. Now it's winning here. It cannot go straight in a straight line. It needs to come back for the higher time frame sweepable levels, meaning liquidity, so it can be efficient. So when it tries to win here, it doesn't. Yes, you could have gotten 2R out of that trade. That's not a win. Okay. 2R is not a win. I'll just say that. 2R is not a win. Why? The model is continuations, meaning 4 standard deviations should be your standard for what you consider a win, unless you specifically played a breaker on the 2 standard deviations because you knew it was a retracement play. If you knew it's a retracement play, the story is different. You can play a 2 standard deviation breaker and count it as a win if you knew beforehand that it was only going to make it to 2 standard deviations maximum, because again, it's retracing. It's not with the order flow of what's going to happen on the time frame, and you're just trying to get the scalp from point A to point B. Try to avoid that. Try to avoid that as much as you can. The more trades that you can try to get that go to 4 standard deviations, the better you will be. Because if you happen to not get as many, your RR will make up for the fact that you're not getting as many. But when you're mixing in the 2 and the 4s, but you don't understand well which ones are going to be 2s and which ones are going to be 4s, a lot of the trades that are going to be quote unquote 2s that only have the max capacity to go to 2 that you think are going to go to 4 will then cost you money automatically because they will never TP. They're always going to take a stop loss. The model is a stop loss or take profit. There's no break evens. I'm not going to teach you guys break evens at all. Stop loss or take profit. Do not add break evens into the model. Adding break evens into the model will hurt you in the long run because you're going to use the break even defensively because you're scared of getting stopped out, and you will get prematurely stopped, and then the trade will run. Happens over and over and over. Happens all the time, literally all the time. Like the person who gets on this trade here and moves to break even because he would already made it to 1 standard deviations gets stopped out. Me, on the other hand, I took the same trade. Okay, I'll just put it up here. Let me see. I took the same trade, right? And I literally bottom ticked it. I took a short and I lost on the short, and then I took the long and I bottom ticked it. So while somebody's getting stopped out break even, I'm entering my position because it's a pullback, and that's where I want to then go higher. And now my risk to reward is a lot healthier. Okay, so just try to eliminate break evens out of your strategy. They're just not worth it. Yes, you might avoid a loss every now and then, but so will it cost you when you avoid the big winners. And the strategy has very big potential to get huge winners, huge runners. So yes, you might avoid 2-3R loss in the next 3 trades, but you also avoid the 6R, 8R, 7R trade right after. So you're actually costing yourself a bunch of money by doing so. Okay. All right. So that's it for the main details. I just wanted to kind of like break down price a little bit better. The long story, I guess, short of it is if you're long bias, and we've been long, but longs lose 2 bullets, back off for a second and either A, flip to shorts, or B, wait until a higher time frame gets swept for another long. But you don't just go and buy the first thing. You need to, again, put it into perspective and put it into context so that you can go on the next one. Okay. You do have to wait for the narrative to be right. Meaning either projections get met plus liquidity is right. So then you can have the perfect buy and whatnot. For example, here, for the 5-minute time frame, CISD, high, low, high, giving us our sweepable. Let's drop on the 1 minute here. And the sweepable gets swept. We create a breaker right here on this candle, this high. This will be bullet number 1. We'll talk about some extra details here, but this is bullet number 1. It then gets swept again, closes up again. Bullet number 2. Gets swept again, and it closes up above here. That's bullet number 3. Then gets swept again, right? And so this would be now bullet number 4 if you kept taking 4 buys. So how many buys are you going to take until it finally works out, right? A bunch. I did this today on a Tradify account because I was trying to scalp the seconds time frame for just to finish out the finish line, but I couldn't finish it today. But bullet 1, 2, once this loses, that should be your stopping point. So you would have taken this long. You would have taken this long. Once that loses, you're off the gas and you're flipping short. Okay. Either off the gas or you're flipping short bias, because now you know we have to deep retrace onto something we left unfinished over here or lower. I mean, it just depends. But I believe that we're probably going to come down here to this 50 minutes busy, which is valid. And then we'll go up higher from there. But we'll retrace to something that makes sense. And then you can consider that side again. But don't consider until proven otherwise. Now, here, let's take a look at the same price action area. The CISD on the 5-minute was here to the downside. High, low, higher, high, lower, low. And the sweepable was right here. So unfortunately, it didn't run the sweepable for you to then take a short. So you wouldn't have been able to take a short on this even if you wanted to. But it did drop. I'm not saying go and sell anything random just because, but rather just be aware that you're going to see a retracement. And if there's an opportunity, awesome. Take the opportunity and, take advantage of it. Like here, we actually have a CISD now to the downside, right? High, low, higher, high, lower, low, CISD, low, high, and then depending on when the market opens, if it opens up lower, this would be a sweepable. And then that sweepable can then be utilized once we get above it to then short again to ride it to the 15-minute BC. And then at the 15-minute BC, we take profit. And then what do? We go long again whenever we get a signal here on the lower time frames to then go long on the 1 minute, on a 1 minute basis, right? So you need to be able to be fluid, but also not flip too quickly to where you're burning yourself. Those are the pivot points and a couple of the extra details. As I think of more details that I regularly do, I'll bring up some more stuff about the 5-minute. But starting, I believe, Friday, I will be moving on from the 5-minute and we'll start off the 15-minute time frame explanation. It's essentially the same thing. There's small, little small details that you want to be aware of, but it's all very similar. Okay. Oh, one thing before I forget on this video, actually, one thing you want to be looking at also is on the higher time frame that you're using for the sweep. Can we create a new breaker from there? If the answer is no, and this is the first bullet, you're pretty much guaranteed to not be able to go from there. So what I mean by that is high, low, high is sweeps, but there is no breaker here, no matter what. Why? Because from this low to this high, which is where the blue candle needs to be, there's no blue candle for a breaker. So the sweep under this to then go higher doesn't have a potential breaker here. Now, sometimes those trades will run, but it's either A, going to be short-lived, so it's just running to finish off a target that has already been on the line to begin with, or B, it's bullet number 2. So if it's bullet number 2, then again, it can be more willing to run. So this bullet number 1 here, when you took a long on this, and well, I took a long on this, it's a very low quality bullet. Why? Because it's bullet number 1, and there's no potential of a 5-minute structure. So that automatically is a fade usually. Then bullet number 2 here was better, but not very good still, because we have 1, 2, 3, 4, 5, 6 candles, right? To take the low, and then he forms. Now, why am I saying the 6 candles? Because swing low or swing high, from my research, just from what I've noticed when I'm doing my back testing, typically speaking, on the 5-minute time frame, will form within 5 candles from the swing point high to the swing point low, or from the swing low to the swing point high. If it's more than that, it can work out, okay? But it does lower the probabilities. So I am willing to take it, but if it erases the BC, if there's no BC here, typically that's a fade for me. So in this case, that would have been a fade as well. Now for this here, 1, 2, 3, 4. So this is good. BC, good. Failed to create the breaker, not good. But this was the best bullet. Out of all the bullets here, this is the best bullet. But it's already what? Bullet 2, bullet 3, right? It's already on bullet 3 here. So it already lost 2 bullets. So this is automatically also a fade. So you would have been able to avoid this. You would have been able to avoid this. You would have been able to avoid this as well. All by just knowing the extra rules. So yeah, I rewatch it, go over the rules again, just so you can remember them. It's basic stuff, and the more you do it, the better you get at doing this, and the better you get at understanding, this little extra details. But yeah, we'll be moving on to the 15-minute time frame at the end of this week, and hopefully you guys start giving me some feedback on the sweepy balls, see how you're liking them, see if you're recognizing them. Honestly, I don't expect anybody to be able to recognize them consistently just yet. It's just way too soon. But hopefully I can start getting some feedback from folks. I'm not sure if I'm going to be opening up a Discord or something where people can give me feedback on their trades. I'm not sure. I just don't know if I have the time to do something like that right now. That's why I closed down the the private group members so that I don't receive any more. But maybe if that's something that a lot of people want, then maybe I'll open up something so that I can give actual feedback to specific trades. Yeah, I'm not sure. Anyways, thank you for watching. Leave a comment, like, subscribe. I'll see you the next time. Bye.